The UK retail sales data released on Friday showed a steeper than expected decline, marking the sharpest drop in nearly a year. The Office for National Statistics reported a 1.4% monthly decline in retail sales volumes in April, well below the 0.3% contraction that economists had predicted. This decline came across multiple sectors, including food, non-food, and fuel sales, and is the largest drop since May 2024. The numbers suggest that consumer demand is weakening, which raises concerns about the health of the broader economic recovery. The British pound remained relatively stable in the wake of the data, trading around 1.275 against the dollar and 1.165 against the euro. Analysts noted that the market's muted reaction reflects a broader sense of pessimism that had already been priced in. The data aligns with a growing narrative of economic slowdown, as households face higher living costs and limited wage growth. The Bank of England's cautious approach to interest rate cuts may now be further complicated by this new evidence of economic weakness. Inflation has fallen from its peak, but the central bank has been hesitant to act quickly. The latest retail sales figures add pressure to that decision-making process. The broader economic implications are significant. Consumer spending had been. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. A key driver of growth in late 2024, but now appears to be cooling. This could slow GDP growth and reduce the likelihood of a strong recovery in the near term. The data also raises questions about the resilience of the UK's economic model, particularly as households face rising mortgage rates and housing costs. The Bank of England will likely monitor this data closely as it weighs the timing and magnitude of any rate cuts. The next key signal will come from the central bank's upcoming policy meeting, where officials may provide further guidance on the path of monetary policy. For now, the pound's stability suggests that the market is not surprised by the data and is already factoring in a cautious economic outlook. However, if further indicators point to a deeper slowdown, the pound could face renewed pressure. The broader implications for the UK economy are still unfolding, and the next few months will be crucial in determining whether this is a temporary dip or the start of a more sustained downturn. The mechanism behind this decline is rooted in the persistent economic pressures on households. With inflation still above the Bank of England's target and wage growth failing to keep pace, consumers are being forced to cut back on discretionary spending. This is particularly evident in non-food retail sectors, which have been hit hardest by the shift in consumer behavior. The stakes for the UK economy are high, as a sustained decline in retail sales could signal a broader loss of confidence and a slowdown in domestic demand. This would not only impact businesses, but also reduce tax revenues and increase pressure on public finances. The Bank of England's next move will be closely watched by investors and policymakers alike. If the data continues to point to a weakening economy, the central bank may feel. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Compelled to act sooner than expected. However, with inflation still elevated, any rate cuts could be delayed or limited in scope. The next key signal will come from the Bank of England's upcoming policy meeting, where officials may provide further guidance on the path of monetary policy. In the meantime, the pound is likely to remain in a range-bound pattern, reflecting the uncertainty and cautious outlook among market participants. The broader implications for the UK economy are still unfolding, and the next few months will be crucial in determining whether this is a temporary dip or the start of a more sustained downturn.